So the banking crisis of 2023 continues, and today it's Deutsche Bank over in Germany. They're sliding, and I feel like the phrase of the day is, give me my money because I don't trust you. And in fact, I'll tell you that this is a thorough through. I want to go through some of the headlines, share my thoughts, get yours as well. And there's just a wild days in market these last couple of weeks. Headline, Deutsche Bank still wobbles as Yellen and Powell insist system is resilient. And this is actually quite interesting because it's mixing essentially international news. You're talking about Deutsche Bank over in Germany, and then you're talking about the Fed chair and the Treasury Secretary here in the U.S., or I should say they're in the U.S. because I'm in Korea, and they get even more international. But the basic gist is that we're all connected. So they're concerned about our banking system as well as, everyone's concerned about each other. More headlines, Deutsche Bank leads slide in European bank shares. German lender falls 13%. Concerns over impact of interest rate rises linger. And you have another one, Deutsche Bank shares plunge, a renewed bout of stress. And it's not just Deutsche Bank. You have also Commerzbank, and then you have a French bank, a Société Générale. And it's actually quite interesting. It's banks throughout Europe. Now, if there's anyone in Europe, please chime in. I'd love to hear your thoughts because we may get different news than what you're getting. But here's my understanding, and I was looking all over to figure out, okay, what's going on with Deutsche Bank? It sounds like the credit default swaps have gone up, and this is basically saying that, hey, we're worried that there's going to be a lot of failed loans, essentially, or failed mortgages. Essentially, people are not going to pay, and essentially, we don't want to insure that because we're worried about too many failures. And again, you guys understand how banks work. They lay out a bunch of money. They expect people to pay them said money, and essentially, if people stop paying, no one has any money anymore. And essentially, as I told you before, please give my money because I don't trust you. And again, credit default swaps are up. But that's the only thing I can see. And I kind of feel like what this means is that there's someone out there doing calculations, essentially, PhD math whizzes that are saying, you know what, I think there's some problems in the system that we see. And that's sort of what we're seeing in the market. The other thing, too, which I think is interesting, if you take a look at the share price. So Deutsche Bank is not as sort of bad as, say, what we're seeing in USA in terms of share price crash. But who knows in this market, you're not at zero yet. So there's always more ways you can go down. But currently at the moment, it's 24% down in the year, 10% down on the pre-market. This is the U.S. shares, that is, as a recording. The First Republic Bank, however, is feeling a lot of pain. We've been tracking this one on the channel. It's been up 20%, down 20%, up 40%, down 40%, these kind of things. Currently, though, it is at $12.13, down 3% in the pre-market. And overall, I guess you add all up, it's like 95% down. So it is kind of a one-way ticket. We'll see if it recovers. One thing that's going on with First Republic, I've been reading, they're trying to find a buyer for this thing. No buyers yet. And that signifies a couple of things. Either one, people don't want to touch it. And this could be the same with the Deutsche Bank thing. We're like, you know what? I just think the risk is too high. I don't want to touch it. Or it could be that people don't have any money to buy it, right? One of the two things. The other thing, too, which I think is interesting with First Republic, I was looking at this. You can see headlines here. First Republic stock drops again as bank stakes trade mixed. There was an academic report. This will not reach headlines. I'm just telling you because it's just too complicated for most people, and it's too scary for most people. But it's an academic report. You can read it for yourself. You can find it. It's called Monetary Tightening of U.S. Bank Fragility in 2023, Mark-to-Market Losses and Uninsured Deposit Runs. It's done by professors. They're over like at Marshall, which is a business school at USC. I believe it's Columbia is in there, and I think Stanford and a couple other ones, but it's just professors at a business school essentially. And what they're doing is they're trying to figure out, okay, we've seen bank runs in Silicon Valley Bank. Is this something that could happen? And what's going on with our system? Now, long story short, they're saying Silicon Valley Bank is not so different from other banks, which is not necessarily a good thing, right? You want Silicon Valley Bank to be really, out there, completely different than other banks. And that's what sort of Jay Powell was trying to say, that this was an isolated case, et cetera. But these, essentially these researchers are saying, no, this is actually not necessarily isolated. And they're also saying, which is really quite interesting, 190 banks in the USA risk failure / insolvency if half the people pull out their deposits. That's the basic finding of the thing. I read through it all. You can read through it as well. I'm just giving you the sort of the quick and dirty version of it. But I do think there's systemic risk, and the basic gist of it is that banks are over leveraged. They essentially lend it out too much money, or put their money in, say, bonds that are going down, long dated ones. And if people again start pulling money out, if people don't have faith in the system, which maybe what's going on over in Europe, you could essentially have dominoes fall. I'm just telling you guys what it is. There's the other thing too, which is going on as well, is now we got more problems with Credit Suisse and UBS. This time, this is the USA sort of saying, hey, are you guys like doing shady stuff to get around Russian sanctions? Which I wouldn't be surprised if they are. They might be. I'm not going to defend Credit Suisse one shape at all. I've said to you guys many times on the channel, I think they're like the bank criminals, these kind of things. And, we'll see what happens with that. And I guess you could make the case that, people in Europe are blaming the USA for the USA blaming them. But it's like kind of a blame game of like who's up and that kind of stuff. I mean, you can look at this, for example, another headline similar. Swiss claim the U.S. banking crisis ultimately tops Credit Suisse, but are they right? So, it depends who you read. Some people are going to say it's the Swiss's fault, some people say the USA's fault. As I said, it's a lot of finger pointing going around. But ultimately is, again, the theme of the day is, I don't trust you, give me my money. And I think that's sort of a lot of how people are feeling. They're rushing to the exits, according to Bank of America. It says here, Hartnett sees greedy stocks falling as cash levels soar, right? People are just like, just give me my money. I want out. Just give me my money. Yellen is concerned about this stuff, right? So we've talked about this. Headline, Yellen says U.S. prepared for additional deposit actions if needed. Now, she keeps going back and forth on language, and you hear different headlines from there. It depends who she's talking to. Like, if she's talking to a bunch of, essentially, this is real, banking lobbyists, she's going to tell everyone, yeah, you're safe. You're good. If she's going to testify in front of Congress, she's going to be like, well, we got to balance the budget. We can't really give money to everybody, right? And it's they're still trying to determine themselves. Now, we talked about this before. The people who are, say, the CEOs and stuff like that of, say, smallest banks, mid-sized banks, they're worried right now because here's the reality. Can the USA insure every single deposit at every single bank? Now, theoretically, they could. I'm saying theoretically, you just print up a bunch of money and you got money to cover everybody. But it's not really a practical thing to do. So I would say they can't realistically cover every single deposit and guarantee everyone. Now, they want to say that sort of, what's the right word to say, rhetorically, sort of like convince people that they are going to do it without doing it, right? You're just trying to put trust into the system. The banking system is all based on trust. You trust when you give your bank, you give your bank the money, that they're going to have your money when you want to get it out. And also, too, you trust that your neighbor's not going to like pull out all of the money before you get a chance to pull out all the money. And the other big concern about the sort of system that we're in right now is that people will pull out their money from, say, the smaller mid-sized ones and run over to the, big banks, and we get banking consolidation. The other thing, too, which I think is interesting, and you guys know this, but I just want to just reiterate, what's different, say, from like, investing in like a bank compared to, say, like a company like Apple. And I was just telling my wife about this today where, I lived through the '08 crisis, and the thing that's always scared me about banks. So one is I lost a bunch of money in WAMU. That was a Washington Mutual. It just basically went to zero. And with banks is like, their whole business model is based on a bunch of money. And if people decide to just like take away their money, you got no bank, like you got no business. Whereas something like, for example, this use the example of Apple. It's not like Apple would just go to zero in a day. They sell phones and stuff like that. They make phones and like they have services. It's not like suddenly everyone would just cut off their service to Apple or cut off all their sales, where again, a bank is different because people can essentially just pull the money out and you got nothing because a bank is like that and money moves around much more quickly. So this is sort of why it's concerning when we see this sort of, is there going to be a contagion around the world? And people are like, again, just give me my money because I don't trust you. This is the theme. Speaking of which, Jack Dorsey, wealth tumbles $526 million after Hindenburg short. If you guys know, we talked about this earlier, about this, the brief gist of it is that it looks like there was corruption over at Square/Block. They're lying about their user numbers. They saw sort of like crazy activity with their accounts where, maybe one or two accounts or, a few accounts were getting way too much deposits from government stimulus check. Like, how could you get, a million government stimulus check deposits? Something's up with that. But evidently, they just kind of ignored it, these kind of things. And this doesn't bode well for Square/Block. And again, this is one of the Cathie Wood things, also a Jack Dorsey connected one. And remember, he was hanging out with both Elon Musk and Cathie Wood, and you can decide what you think about that. But essentially, though, the jig is up, or the gig is up. This is also the same with Do Kwon was arrested. We talked about this earlier before, but just want to reiterate, I think, these kind of situations are like, I don't trust you, give my money, let's find that guy, I need my money. Because essentially, interest rates are going up, the credit market is freezing, and it's harder to get money these days, and you're worried about people paying you, and very few people are or I'll say very few, less people are paying the bills like they were before. This is an interesting example. I don't talk about Korea like specifically that much, but there was actually an article in our news about Korea, and I live here, and I can just tell you a little bit about it. So, headline: unusual 828 billion loan market magnifies housing risk in Korea. Basically, the housing market is slowing. You can see here there's a little bit dip there, and this is on the thing called Chonsei. Now, I'll explain Chonsei in a second, but I want to show you this chart because this is actually a really, really interesting one, and I didn't even know this. It was a part of Switzerland. So this is the sort of household debt around the world, and they're saying Switzerland's like way up there. Korean's number one, so that was one thing about Korea, but there's a caveat there, and I'll explain in a second there. But I just want to point this out. So I guess the Koreans, and you got the Swiss, the Aussies, right? Australia, Sweden, UK, US. So USA is actually not the top for household debt, but it is up there. And you got Japan, China, Singapore, and Italy. But it's actually quite interesting because a big thing in essentially modern economies, is the world that we live in, or the developed world, is like it's all based on credit and debt. This is sort of how we, get things going. Essentially, the basic gist of it, you guys understand this, is that a developer wants to build an apartment building, and they borrow a bunch of money from a bank. They build said apartment building, and a bunch of people come and rent it. Maybe they use their credit cards to rent it, whatever. And they could be at jobs too that their companies have, borrowed a bunch of money to sort of stimulate that company. And then the, consumers that want to buy from that company have also used it in credit cards, et cetera. Like everything's based on debt, and you borrow money in anticipation that you can generate money by people coming through the doors and business, et cetera, right? And those people have money because it's all based on debt. So everything's based on debt. Hope you guys understand that. So it's really quite interesting, though, is that it's like something like Switzerland, where you have this issue with Credit Suisse, and then remember the taxpayers over there, it's like each man, woman, and child, that's how they phrased it, is on the hook for $13,500 for the bailout of Credit Suisse. I'm just laughing because it's so ridiculously corrupt. Now, the Korean system is actually interesting because Koreans have a ton of debt because the housing system is different. The basic gist of it is in the USA, say if you want to rent an apartment, you guys know how this works. You put a deposit, maybe like your first and last month's rent, and then you just, sign a 1-year contract or whatever for your lease, and then, you pay the rent every month. And Korea's a different system. Many Koreans, you have a bunch of cash. It could be like 100,000, 200,000, maybe as high as say 300,000, something like this. You'll just give the landlord that money, and then you live rent free for a couple of years, right? It's a very, very different system because the average American wouldn't just have that much cash. Now, the average Korean doesn't necessarily have that much cash either. So what they do then is they then go to the bank, get a loan for say that 200,000, and then they give that 200,000 to the landlord. Now, what happens is really quite interesting. The landlord then has a basically free loan money from the person who's living there, and then that person will pay, money to the bank. Now, what happens at the end of the 2-year contract, sometimes, and this is actually a serious, legitimate problem, the landlord has committed that money to building an apartment or just, buying a yacht or doing whatever they're going to doing. And at the end of the contract, they're supposed to give that, say, 200,000 back to the person who rented, but they don't give it back. And if you don't have insurance, you're out of luck. And so this is part of the cycle that we're in sort of around the world. It's not just Korea. It's not just Germany. It's not just USA. It's not just Italy. It's not just France, et cetera. Is people are like, I don't trust you, give me my money, because it's sort of the dominoes keep falling. And this is sort of what our banking system is built on, is debt. And I'm sure you guys understand, I can do more diagrams and draw stuff like that, but I give you a basic gist of sort of how the Korean system works. But this is it's like a recurring theme. People are like, give me my money. I don't trust you. Over in France, they're protesting. This is the headlines. Bordeaux City Hall set on fire amid nationwide protests against French pension. Now, if you remember, we talked about this. Essentially, Macron wanted to raise the pension. The age, I think it was like 62 for full retirement. They wanted to raise it to 64. In comparison, USA is like 67. I was talking to my wife. I think it's something like 65, something like that. So, France is actually kind of low at 62, considering they want to raise it to 64. And this is just a practicality thing. I'm just, siding on I know the French are mad and they're protesting and they're literally burning buildings like there. I know, but in many countries like that, when you talk about pensions / Social Security, it's a numbers thing. It's just a numbers thing, that there are too many old people and not enough workers. And you got to figure out a way to support this system. And that's just a real thing. And so you may have to cut benefits. I'm not saying like it's great to cut benefits. I'm not saying that at all. Or you could raise taxes, this kind of stuff. But, one of the issues is that in many of these kind of systems, say Social Security, as inflation goes up, you have to raise COLA, cost of living adjustment, to sort of match that. So this is sort of putting more pressure on these pension funds that may or may not be, solvent years down the line because the numbers don't add up. Hope you guys understand. And I'm sure you guys know it's been an issue, long-running issue of like, people my age are like, are we ever going to get Social Security? Is it going to be around? I laugh, but you guys get to understand that I'm not laughing because it's haha funny. It's just like, it's frustrating. Also too in France, so the, I guess King Charles says canceled this trip. He's like, you know what? There's too much violence. I'm not going over there. So forget that. There's like protests in the street over at France. And you got this other issue too, which I've already mentioned, but I just want to show you some charts. Companies big and small lose access to credit amid bank stress. Everyone's worried. So this is U.S. investment grade bond sale, right? So you're trying to get some bonds, trying to get some money. And essentially in 2019, they're getting around, 100 million. 2020, they're getting tons of cash. So it's like, 250. In 2021, around 200. 2022, around 200-ish or 220, that kind of thing. And then in March 2023, where they are now, this is basically comparing March in different years, they're well under the last, say, 4 years. You guys can see a free sell. So basically the credit market is freezing up because essentially it is what it is. Like, you're not going to, essentially loan someone money if you don't think they're going to pay it back. It's basically what it is. Or you've already committed, all of your capital, et cetera, and you can't commit anymore. And it could be the same with the First Republic. Either they don't want to touch it because it's too risky, or they don't have any money to, get it with. Moreover, this is also affecting consumers, sort of the sentiment. You can read the headline. Most Americans doubt their children will be better off. This is from the Wall Street Journal. And basically, like, do you think your children have a better life than you? I don't feel confidence way up there. Feeling confident they are is way down there. And this is an interesting one. And I'm just sort of kind of reiterating the world that we live in. This was a big story in Korea. It was all over, Instagram, social media, et cetera, and YouTube, et cetera. It was, there was a zebra that escaped from the zoo. This is a true story. And it was just like running around the city for a while, and everyone was taking a picture with their phone, so that you can find if you really want to look. But there's a zebra all over the place. And actually, you won't find it in the American news, but it's in the Korean news. The zebra's parents died, and the zebra's only a couple years old, and it was just, sad and kind of freaking out. So I felt sorry for the zebra. And you guys know this. Like, zebra is like one of those cool animals we all study and when we're kids, and we care about the zebra. So I care about the zebra. And it's funny. I'm just thinking about this myself. Is when I go through all the banking news, and I know I have a sense of humor about this stuff like that. But I am concerned about our whole system. And this is sort of why I tell you guys the same sort of advices over and over again. Manage your risk. Make sure you're secure at your job, because the way that things are going right now with the credit market freezing and the banks having, problems, it's scary out there. And so you got to protect yourself, right? Interest rates are going to be going up. They're probably going to stay elevated for a while. So you're going to want to pay down your debt. And in regards to, what you want to be doing with your life is always taking the sure bets that you can. And if you are going to take risky bets in anything, manage your risk. Don't YOLO on stuff, because right now the system seems unstable to me. You're going to turn into, be it other finance channels or other, TV or whatever. And the big money is always trying to reassure you, because they want you to, keep managing your money and making money off fees and these kind of things. That's what the financial industry does. And the governments will say everything is fine as well, because that's what they want to do. They want to keep everyone calm, because you don't necessarily want bank runs. But, I can't tell you like which exact bank's going to collapse and when they're going to collapse and when the exact bottom's going to be. But what I can tell you, though, is like the whole world's not going to fall apart. We're all going to be okay. But for those of you who have managed risks, I'll give you an example. For people say, like, we'll talk about meet Kevin Guy is an idiot. He goes out and buys like a $13 million jet and way over leverages himself. And like any sort of change in interest rates or change in, employments of people getting laid off or whatever, just like these kind of changes when you're way over leveraged and way over committed really, really hurts you, and you're just really struggling and sweating bullets. And so this is sort of why you want to plan ahead. And this is sort of what I'm thinking. So hopefully all this stuff makes sense to you guys. I always enjoy hanging out with you guys. And again, if there's anyone in Europe / Germany or France, I'd love to hear your thoughts on what you think is going on. And if there's been any alternate explanations of, why, say, Deutsche Bank is crashing today. So I do appreciate your time, and I'll catch you guys in the next video.